Hello, friends. Today, I want to talk to you about a Venezuelan American who has built a really great company. Now, I already own it, so I have already shared that thesis with you guys in our Discord group. And this video, I'm not going to publish on YouTube right away. I will just only keep it private for our Discord members. And maybe after a month or two, I will probably release it to rest of the community. So in year 2000, Abel, a trained engineer born in Venezuela who became a US citizen, founded Emerging Markets Communication, a satellite service for ships and remote military operations. Over 16 years, he built it into one of the world's largest satellite capacity users, serving the U.S. Department of Defense, the State Department, and the UN. In 2016, he sold it for $550 million. Rather than retiring, he used that credibility and seed capital to pursue something far more ambitious. In 2017, he founded AST and Science LLC in Midland, Texas, with a single radical idea. What if you could skip the cell tower entirely and connect a regular, unmodified smartphone directly to a satellite? No special hardware, no satellite phone, just the phone already in your pocket connecting to space. Everyone in the industry told him it was technically impossible. And here we are, where he has filed, I think, more than 24 patents under his name. So things are working out very well. But you might have noticed that stock is down roughly around 50%. And where do we go from here? So today I'm going to explain to you how this stock moves, what are some of the positives, what are some of the negatives, and what I plan on doing with this company. So hopefully you'll find this video extremely helpful. So do listen to it and try to do a little bit more digging on your own to see whether you agree with this thesis or not. Once again, this is not an individual financial advice for you. And if you are a Discord member, then you already know my process. You know how I do the buying, how do I build upon thesis, and how do I grow the share count. As usual, slow and steady. But one thing to remember is that market moves where the money is. So for example, right now, semiconductors are on fire. Think about it. I mean, just a couple months ago, those stocks were down 40, 50, 60%, and now they're back up. But the space economy stocks are now down 40, 50%. And soon you're going to see those going to go up. So market kind of moves, where the money is, that's where everybody start moving, but nobody wants to be the first one to pull the plug. So until a big institutional investor comes into the play, there's a big news, there's big coverage, some catalyst needs to happen. And that's when people start moving in. I think in case of ASTS and Rocket Lab, that catalyst is going to be SpaceX. So we'll see how that goes in coming months. But for now, this is a great time to accumulate, at least for me. As usual, not an individual investment advice. I'm just sharing how I think about the companies and what do I plan on doing. And I'm going to start doing more of these deeper dives, at least for established company. You guys already know that some of the companies that I buy, they're not necessarily established, but I do see a big potential in them for one reason or the other. But see, these established companies, I think we should, at least try to understand them, what's going on with that company. Now, the first thing you got to answer is that what problem is this company is solving and who is it solving for? So the fundamental problem that ASTS is solving is that approximately 3.4 billion people on Earth are either unconnected or have severely limited cellular coverage, not because they don't have smartphones, but because building cell towers in remote, rural, and maritime areas is uneconomical. The economics of cell tower requires a minimum population density to justify the cost, and obviously that cannot happen, but ASTS have the answer for it. They could replace the tower with the satellite, but not a traditional satellite, or, the traditional satellites require a dish or a satellite phone, but ASTS has built satellites so large and so powerful that they can talk directly to the compact antenna already inside the cell phone, in your iPhone, in your Samsung Galaxy, in your pocket. No special hardware required, no subscriptions to a satellite service, just your existing cellular plan extended into space. Although that does kind of get me to wonder, how is the government might plan on using that? I mean, just kind of like what we're seeing with AI and all that stuff, can possibly the US government can go to ASTS and say, hey, look, we need you to tap into any cell phone in the world. I guess they probably be able to do that if they wanted to. So just keep that in mind. So you might say, well, where do I buy ASTS? I have not really seen their stores. I don't see anybody selling their cell phone. So how do you get their service? Well, ASTS does not sell to end users directly. It partners with existing mobile network operators like AT&T, Verizon, Vodafone, the typical company that you already have. And these companies already have billions of subscribers. So those operators pay ASTS a wholesale fee to extend their coverage into areas where they have no towers. The subscriber still pays their normal mobile bill. They just now have satellite coverage in places they previously had none. So this is brilliant. ASTS gets paid without building a consumer brand or managing 3 billion individual customers. Over 50 mobile network operators, partners covering nearly 3 billion existing subscribers, and they have already signed agreements with AT&T, Verizon, Vodafone, Rakuten Mobile, TELUS, Bell Canada, Orange, and Vodafone Idea. These are some of the big names that you probably already know. The first generation satellite was Block 1 Bluebirds. Each has phased array antenna covering 693 square foot, roughly about 64 square meters, about 10 times the area of Blue Walker 3 used for initial commercial testing and government work. Operates in a low Earth orbit at approximately 500 kilometers altitude. However, they launched the next generation. Each has a phased array antenna covering approximately 2,400 square feet, almost 223 square meters, the size of a large apartment. This makes them the largest commercial communication array deployed in low Earth orbit. Block 2 satellites are expected to exceed 120 megabits per second speeds, comparable to a good home broadband connections directly to unmodified smartphones. Now, low Earth orbits, LEO, means that satellite orbits around 500 to 600 kilometer altitude, much closer than traditional geostationary satellites, which are typically located at 35,000 kilometer. So this proximity is what makes direct-to-phone service possible. The signal doesn't have to travel 36,000 kilometers each way, which would introduce crippling delays. LEO, like I said, low Earth orbit satellites orbit the Earth in roughly 90 minutes. So a constellation of many satellites is needed to provide continuous coverage, hence the goal of 40 to 60 in orbit by the end of 2026 and 248 eventually. I just wanted to paint the picture so you understand the growth trajectory of this company. So 45 to 60 in 2026, and they need to get to 248. Now, in April of 2026, a Blue Origin launched its third New Glenn rocket carrying ASTS Bluebird 7 satellite. The rocket placed the satellite on a wrong trajectory. It did not reach its intended orbit. The satellite was effectively lost. AST SpaceMobile confirmed the satellite is insured and insurance should cover the loss. However, this creates two problems. Number one, it delays the satellite count, was targeting 45 satellites by the year end of 2026, and Bluebird's 7 loss means they start from 6 instead of 7. Bank of America estimate this could cause ASTS to fall 7 satellites short of 45 satellite target ending 2026 at 38. Number two, it raises questions about Blue Origin's reliability as a launch provider. Bluebird 8 to 10 are ready to ship and the next launch campaign is imminent. But the cadence now depends on flawless execution from multiple launch providers. So let's talk about some of the positive and then let's also try to understand some of the negatives as well. And do me a favor, if you like this format, then please let me know because I usually try to write stuff on Discord for you and maybe some people read it, maybe some people don't read it, but the problem is limitation of writing. I'm not really that good at writing, otherwise I would have become an attorney. So I'm more of a talking person. So if you like this medium, at least let me know that this was helpful to help you build a good a thesis around a company. So let's talk about what are some of the positives in this company. First of all, the technology. So this technology is real and it's validated. Bluebird 6 exceeded 120 megabits per second directly to unmodified smartphone. This was the impossible milestone everybody said couldn't be done. The physics works, the engineering works. The only question now is execution and scale. By the way, I mean, I used to own T-Mobile stores, and once T-Mobile grew to a point where they did not really needed dealers anymore, then they kind of took over the whole business. Sprint did the same thing, Metro PCS did the same thing, Verizon did the same thing. Why I'm telling you that story? Well, what I'm saying is, once ASTS is able to directly provide service to every single cell phone on planet Earth, and who knows, by that time, it might not be really be a question of providing cell phone, but it would be more providing the data. I mean, can you just imagine what that future might actually look like? I mean, would I really even need a cell phone company? Can't ASTS be simply a data company that provides me access to data wherever I might need it? Okay, so that's number one. Number two, the addressable market is almost incomprehensibly large. 1.1 trillion global cellular wireless market with 5.6 billion mobile subscribers. And it's growing. If ASTS captures, let's just say, even 1% of the revenue from its 3 billion potential subscribers via MNO, okay, let's step back for a second. So, like I said, the ASTS doesn't really sell phones directly to consumers, right? So they partner up with these big companies that already have subscribers and they charge them fees. So what I'm saying is, even if they can 1% of the revenue from all the 3 billion people, that would be roughly $10 billion in revenue. The current market cap of this company as I speak is, let's see, as of today, it's $27 billion. So think about it, just 1%. Okay. Uh, the possibility is just enormous. $10 billion revenue just with 1% subscriber. The B2B wholesale model is great. You know, like I said, it simply means that ASTS earns revenue without needing to acquire consumers. The MNOs do that. Every AT&T customer who gets satellite coverage in a dead zone is automatically an ASTS revenue without ASTS spending a single dollar on marketing. One of the biggest costs for businesses is marketing, and this company doesn't have that. $1.2 billion is contracted backlog. I mean, that's a lot of money. Legally binding revenue that has already been committed, not aspirational projection. Vodafone has 10-year agreement. There are government contracts. I mean, these are signed deals. $3.9 billion in cash fully funds the Constellation plan. No urgent dilutive capital raise is needed to execute the core plan. So overall, the possibility of this company is just enormous. FCC has already given authorization 48 satellites. This was granted on April 1st. That means the regulatory path for this company is completely clear. I mean, for somebody else, that might take many years to get this kind of clearance. Like I told you, the founder already have a lot of patents under his name, but the company now have over 3,700 patents under their name. So that is very strong. The manufacturing cost of about 21 to 23 million per block to satellite is actually quite competitive. And they're improving as the production scales towards 6 per month. And then government revenue, you guys know government revenue. Government revenue is diversified and it's growing. The U.S. military and government agency need exactly what ASTS provides. I mean, right now they're operating in Iran. And I mean, look at our bases. We are all over the country. So obviously, I think that is one revenue we can certainly count on. So there are a lot of good things going for this company. That's why I would want to keep some stake in it. Now, not everything is all green. So we got to look at some of the problems as well. I think the biggest problem is SpaceX. SpaceX Starlink is already at commercial scale. $9 billion in revenue, 10 million users, 5,000 plus satellites, and expanding direct to phone. ASTS, in comparison, only has 6 satellites. The gap in execution is huge. Even if ASTS technology is better for unmodified smartphones, Starlink has overwhelming infrastructure advantage. Bluebird 7 was lost on Blue Origin launch. The 45 satellite 2026 target, like I said, may end up at 37 or 38. Every satellite lost is months of delays in commercial service activation and revenue. Blue Origin's reliability as a launch provider is now a genuine concern. And then, as you guys already know, I always look at that insider selling. There was a huge insider selling in the company in April of 2026, almost $270 million worth stock. When a strategic investor who understand this technology sells $271 million, it is worth paying attention to. This is not a retail investor taking profit. This is someone with inside knowledge of partnership. So that does concern me. 27 billion market cap on $70 million revenue. That puts price to sale ratio of this company at 300x, one of the most expensive stocks on a traditional metric. You need to believe $1 billion in revenue is coming within 2 to 3 years, and that those revenues will be high margin to justify this valuation. Commercial service is still story of later part of 2026 at the earliest, and the commercial service is initial intermittent coverage, not the seamless global coverage the marketing material suggests or the stories that you hear on the internet. 45 satellites at the year end 2026 provides limited service, so I cannot really price the stock based on that. Now, I told you how FCC has granted them some licenses, but FCC denied expanded spectrum, 1.5 gigahertz and 2 gigahertz bands. This specifically limits AST's European expansion strategy and forces reliance on lower band frequencies that may constrain capacity. Q4 earning per share miss of about 26 cents versus the estimate was 18. Operating expenses are rising faster than revenue, not slower. Cash burn is accelerating, not deaccelerating. Then the question comes 2027. Well, 1 billion revenue target is set for 2027. The 1.2 billion contracted backlog only covers minority of that target. Most 1 billion 2027 revenue is not yet contracted and depends on commercial service successfully launching and subscribers adopting the service through their MNOs. So the bottom line is this: ASTS SpaceMobile is not a traditional investment. It is a bet on whether a specific technological vision becomes the infrastructure of the future. If it works, if ASTS deploys 240 plus satellites, activates commercial service with AT&T, Verizon, Vodafone, and revenue scales towards $1 billion, the current $27 billion market cap will look cheap in the hindsight. If execution falters, satellites lost, spectrum denied, Starlink wins the market, the stock could fall 70%. And I'm talking about that from here. The stock is already down almost 50%. There is very little middle ground. This is a high conviction position for patient investors who believe in the technology, not a position for anyone who cannot tolerate losing most of their investment. So this is a very, very risky bet. Now, let me give you some interesting insights into this stock. ASTS does not move like a normal stock. It moves on milestones, successful satellite launches, FCC approvals, commercial service activation announcements, and partner expansions. The stock went from $2 to $38 in weeks when Block 1 launched successfully. It went to 129 in January 2026 on momentum and anticipation. It fell 45% from that high when execution stumbled. The pattern is very simple: buy into milestone fear, sell into milestone euphoria. Never chase the satellite launcher rally. Buy into the sell-off when something goes wrong that doesn't break the long-term thesis. Bluebird 7 loss sent the stock significantly down, but the satellite is insured. Manufacturing is continuing, and Bluebirds 8 to 10 are ready to ship. If business model remains intact, partners are still committed, cash runway is still adequate, and FCC authorization still stands, a launch setback is a buying opportunity, not an exit signal. The current $72 price is 45% below the all-time high set when investor optimism peaked. At approximately 20 to 25 satellites in orbit, ASTS should be able to provide near continuous coverage over major US and European markets. This is the threshold where B2B wholesale revenue model starts generating meaningful recurring revenue from AT&T and Verizon subscribers. Buying when this milestone is announced before the market fully prices in the revenue has historically been the optimal ASTS entry timing. At $70 today, you're paying a premium for a company with 70 million in revenue and enormous uncertainty. Position sizing discipline is extremely critical. This should be a very small portion of any portfolio given the binary outcome potential. If stock falls to $50 or below, the general market weakness, not a fundamental business break, that would represent the best risk reward entry point the stock has offered since the late 2024. Now, we just went through a correction, so I don't know if we are going to get that opportunity or not. So if you do believe in the upside, the whole the story that I've shared with you, then might not be a bad idea to have some exposure to it. But the moment you're going to get that positive signal, stock is going to move really, really fast. I wouldn't be surprised it goes up 15, 20% on the same day. And after that, it will continue to go up. So you can wait for that day when that happens. However, AST's core technological differentiation is that it works with completely unmodified smartphones, no hardware attachment. Currently, Starlink direct-to-cell requires a small add-on for full data capability. If SpaceX engineers away this requirement and deploys true unmodified smartphone compatibility across its 5,000 plus satellite fleet, ASTS loses its primary moat. That is what scares me about this company. Otherwise, I mean, if that was not the case, I wouldn't really mind putting maybe 5% of my portfolio in it. But because of that, I'm a little bit scared. Now, AT&T and Verizon, these two are big partnership. So, and they are the US revenue for them. If either carrier signals reduce commitment, renegotiation terms downwards, or begin a competing arrangement with Starlink for direct-to-phone service, the US revenue thesis will break. T-Mobile Starlink extension in April 2026 is exactly the kind of competitive encroachment to watch. T-Mobile choose Starlink or ASTS. The $3.9 billion cash position that ASTS currently have is meant to fully fund the constellation plan. If satellite losses, launch cost overruns, or expanded operational expenses start burning through cash faster than model, ASTS will need to raise more equity, diluting existing shareholders. Watch the cash balance on each quarterly update. If it drops faster than the revenue is growing, that is a warning signal to reduce exposure. ASTS most reliable pattern, what I have noticed in past, stock rallies 50 to 100% in the weeks before a major satellite launch or a commercial service announcement. Then sells off regardless of the outcome. The Block 1 launch in September 2024 and the January 2026 peak both followed this pattern. When you see ASTS up 50% on upcoming launch momentum and you are already holding, I would say take some profits before the event, not after. So that is the way I am planning on playing this for now. Well, you might be wondering, so when is the next launch? Well, that is the reason why the stock is still down. As of last month, since the Bluebird 7 failure, ASTS confirmed that Bluebird 8 and 8, 9, and 10 are expected to be ready to ship in approximately 30 days, which puts them in a pipeline of May 2026. The problem is they have not really confirmed the launch date. There is no public announcement when are they going to launch, and that's why the stock is still down. The moment they are going to announce that, I would expect stock to rally. So, and then, like I said, there's a lot of excitement about SpaceX that is going to provide a lot of tailwind to that as well. So we'll see how that goes. And then again, if that launch is successful, then people will be super excited about the other launches in June and July. And I wouldn't be surprised if the stock is back to $120, $140 range by then. And that is one reason why I'm not going to publish this video on our regular YouTube channel just yet. Let's see how